Our weekly update for the 29th of February, leap year, so the one every 4 years we get a chance to do this. Firstly, as you all know, the RBA came out with that's the Reserve Bank of Australia, by the way, came out with their report, and 4.25%, no increase or decrease in rates, as you're already aware. But there was a substantial increase in the number of new rental listings that hit the market. Now let me quote you some numbers here. This is a RP data report that goes back to, well, it's on Friday, from Friday the 24th of Feb. But just looking at some of these stats, the number of properties advertised for rent for the month ending the 19th of this month of February shows that the rental stock of new properties coming into the market is now 3,583 properties for the month ending February, middle of, or late February, compared to 2,721 properties. So if you're renting, there's more stock coming onto the market. And interesting that the amount of current properties available for rent is also up. It's up from 5,680 last year to 6,596 this year. Now, while the rental stock is increasing, what needs to be understood is the sales stock is gone the other way. So the amount of new stock coming on, new properties entering the market for sale, so in other words, if you're selling your property or looking to buy, last year for the same month, there were 3,872 properties that came onto the market for you to buy, and this year that's down to 3,446 properties. But interestingly enough, and the twist in this, is that the number of total properties on the market is exactly the reverse. So the number of total properties that are on the market is dramatically increased to 20,366 compared to 15,924. Now, this is a very, very interesting dynamic, and it means then that the properties that are being put on the market with people are not meeting the market, and they're sitting there, spinning their wheels, just sitting in the market almost indefinitely, a lot of these homes, and there's hardly any new properties, fresh properties, coming on for you to look at. So I'm writing the inside story this week on that, so check the blog because there's more information relating to this dynamic. It's a very important one indeed. Now, with regard to the homeowners and what's happening with the building and what's happening with the market there, the HIA released figures recently to say that there is an estimated 9,800 commencements occurring compared with last year at 10,500, and that is again compared to 2010, 11,200. So over the last 3 years, in 2010 we've had 11,200 starts, gone to 10,500 last year, down to an estimated 9,800 this year. The good news and the green shoots that we're looking at is that the homeowner's warranty demand has slightly gone up, and that's a forward indicator, so that may mean that the forecast of 9,800 could be conservative, and with any luck at all will come in roughly what we did in 2011 with a number of home starts. So it's very tight for builders. The housing affordability for South Australia is something that I certainly wasn't aware of until this week, has actually dropped, and we're now sitting in the middle of the market in terms of the states as roughly not the most unaffordable state, but also nowhere near the most affordable state, which is where we usually sat. And the housing affordability for South Australia in the last report, only just released, was the index fell 2% over the last 6 months, the only state in Australia to actually have a drop in the affordability. Not great news for South Australian people, but it does show that the South Australian market is resilient and it's holding up, and it does actually concur with the theory that if you buy in South Australia, you're buying into a very, very stable market compared to the rest of the country. That's it for our weekly report.